Good morning, everyone. This is your European Open briefing for Monday, 11th July. My name is Michael Frentiades. I am the chief economist here at XM.com, and here are the key points you should be aware of today. The yen falls sharply on stimulus anticipation after Abe's win in Japanese upper house elections. Risk is definitely on after a strong June jobs report, as the Fed is seen still on hold. We have some data today that have already been released, such as Chinese inflation yesterday, Japanese machinery orders, Canadian housing starts. A relatively quiet day, it must be said. In the week ahead, you should take notice of the Bank of England. It's meeting on Thursday. It could deliver some rate cuts or some stimulus. We will see about that. And also on Tuesday, we have inflation report hearings. We have Chinese growth on Friday, expected to decelerate a bit more. And US inflation and retail sales will be released together on Friday. Now, the yen dropped sharply after Abe's ruling coalition has captured a supermajority or 2/3 of the Senate. There are hopes for more stimulus that will be announced shortly. I think Abe has stated as much. This win could also lead to talks about constitutional reform, revising some pacifist articles of the constitution. So it is good news for the economy. It probably missed some stimulus, but it could also lead to some higher tension in the medium run if there is if the Japanese constitution if there are attempts to revise that, it could stoke some tension. Although it's far from a sure bet that this is going to take place, a constitutional reform. The Nikkei index was up 4%, and I have to say that Japan is probably the only country where good news is greeted with a sell-off in its currency. So that's why we saw the yen falling sharply today. We have to say, though, that a weaker yen was part of the Abenomics package of reforms. So if there is some renewed strength or some new initiatives, maybe the yen will also weaken. And also hurting the yen was the risk-on feeling from Friday's non-farm payrolls. On to the payrolls, you saw we had a very strong number out of the US. You saw it's one of the highest numbers since October 2015. And the market had a tough time factoring in the employment numbers. Why? Because on the one hand, the headline data was strong, the participation rate rose, which is good news, showing that more workers are interested to join the labor force, but wage growth was weak at 0.1%, very low wage growth. The Fed also appears to be firmly on the fence for the next few months, so it's not going to move to make the Fed move. So overall, this is a good environment for risk assets, as it combines decent economic performance by the world's largest economy, but also loose monetary policy. And here you can see the dollar index had some troubles deciding what to do with this number. It rose, then fell back, then rising again. Overall, it appears to be a positive, and in interest rate markets, at least the possibility of a cut has been removed. So there was a rise in the 2-year treasury rate, but not so big, from 61.5 basis points to around 64 basis points. Now, the S&P 500, the US stock market benchmark, could open at a fresh all-time high today. It closed less than 0.25% away from its previous all-time high on Friday. So with momentum positive today in markets, it could push through the the all-time high. It's around 21.34, 21.35, somewhere there. So very close. On to the data. Chinese inflation was a bit better than expected. However, Japanese machinery orders were bad. You can see expecting a rise of 2.6%, but getting a drop of 1.4% and a year-on-year drop of 11.7%. Quite substantial. Australian housing finance was not as bad as expected. It came at minus 1% compared to expectations of minus 2%. And we have the Canadian housing start later in the day together with the US employment trends. In addition, Esther George, the Kansas City Fed president, is due to speak, and we have to say that she is definitely on the hawkish side. She has dissented from the committee decisions in the past advocating a rate rise, so it will be interesting to see what her take is on the situation, to listen from one of the hawks what their arguments are. That's all from me today. Thank you very much for watching and have a great day.